We're going to stick with the market sell-off right now and take a look at what's happening globally, because we saw heavy selling during the Asia session, some of those losses carrying over here into Europe. For a closer look at what we were seeing on a global scale, Yahoo Finance markets and data editor Jared Blikre. Hey, Jared.
Thank you, Shauna. And let's just take a trip around the world. We're seeing NASDAQ futures as well as Russell 2000 futures down 5% in the U.S. They are the leaders to the downside. Over in Europe, we have in London, we have the FTSE. That's down 3%. And you take a look at the year-to-date gains, it now just breached a significant support level. So I think a lot of these indexes are going to be testing their unchanged mark for the year fairly soon. You can see a similar dynamic out in Frankfurt with the DAX. That's approaching the unchanged line for year to date. But then where things really got started, and by the way, Ed Yardeni did a great job outlining the carry trade, defining that and how it's affecting our markets here. And you can see this playing out. In Tokyo, the Nikkei is down 12%. So now year to date, it is down 6%, had been in the green only Friday. And then you take a look at the max chart here. We're having the worst day since 1987, and it's hard to see. That was not the peak, by the way. The market would go on to reach a peak a couple years later, but I think that's instructive because it's possible that today is just a one-off. But you take a look at the leverage that has been built up in the system. This is all about the difference in interest rates between the U.S. and Japan. Japan just raised their rates only last week to 25 basis points, and we're talking about cutting. So Japan is kind of the canary in the coal mine. Japan is always the last to cut, and it's usually the first to last to raise and the first to cut. And here's what we're seeing in the FX market. All this green means the yen is strengthening in a huge way against these currencies. A 1% move is really big in currencies because of the leverage. You take a look at 5% that we're seeing with the Mexican peso, that is just astronomical. And then you compare that with the year to date, we've seen some big moves there, but 5-year really tells you the trend. It's more been about yen weakening than strengthening, and today is just the beginning of that reversal. Guys?